for someone like you, it may be even beneficial for you to set up an LLC anyway.
Just under yourself.
Just for yourself, exactly.
Oh, okay.
Yeah, because it's you can't because how a C corp works, you can't control I would say activities in there entirely, right? Because they operate their own entity. They don't really flow through to your income unless you just take the salary, right? Because you don't even get a distribution out of them. You just get whatever salary they tell you, right? So it may even be more beneficial if you set up yourself up as also as a consultant, if you would, right? Some kind of business like that, and take money through your LLC first, and then you can get another set of business deductions on top of that, and then let that income pass through. So that may be a strategy to minimize your tax burden even further than what you're doing now. And I'm only mentioning this because I'm assuming that your C Corp, since you say you haven't done much retirement planning, isn't offering a benefit plan.
No.
Okay, yeah, they are now offering you a 401k plan.
No,
correct?
No.
Okay.
Yeah.
So, and then another question I usually ask people is like, everyone takes money out of the business, obviously, right, to fund personal expense, personal living expense, and things like that. But then it's about like, is the money you're taking out meeting your obligations? Is it meeting your financial goals of how much money you want for your living expense, how much money you want to save for yourself, for your family? And I mentioned that because if you do set up an LLC and you're the only member of it, one really powerful tool for you is the Solo 401k.
Okay.
Solo 401k basically is a 401k plan just for single member LLCs. Or if you have a wife, that's fine too. Your wife can be part of it. And basically allows you to deduct up to $56,000 off your taxes. And that $56,000 doesn't disappear. It goes into a 401k account for your retirement planning.
So that's actually hard money that we put in a 401k.
Hard money that deduct your current tax liability of the current year, and that's a huge amount. Like for example, if I was working at a Big Four before, right? Usually the amount you get to take each year is $19,500, and that's the current amount, right? That's like if you max out your 401k. As a business owner in an LLC or a partnership, you get $56,000. It's insane, right? So you can imagine if you made like $1 million in your business and all that, right? You have all this cash flow, and you want to, I will say, legally hide some. That's one best way to do it. And then if your wife works for you in your business, your LLC, that number doubles. So you'll be 56,000 plus 56,000.
Yeah.
So it's $112,000 you can not only deduct your tax liability, but put towards your retirement.
Now, what would happen if you went in and took some of that out of the 401k? Then you got a big tax bill on you.
Yes. So before, I would say what they call retirement age, I think they mark it at 59.5 now. Yeah, I think 59.5.
Yeah.
Before that point, yes, if you do need that money out, there's a 10% penalty, right? But after that point, then you can take it out as much as you like. There's an age. I'll look it up for you. It's neither 59.5 or 60.
I'm way past that already.
Oh, okay. Then you have
I'm
nothing.
almost 70 years old.
Then you have nothing to worry about as far as can you take that money out.
Awesome.
Yeah.
But that's a great idea, and I think that's
Yeah. Then you
should definitely start looking into that. If you can start your own LLC, there's that benefit of, that's why I was asking you about this high coaching program, right? This another revenue line would be a great legitimate way of having your own LLC if it's not part of your C Corp. Like this can be under just your name, right? Or you and your wife, and then that's your business, right? And that's the income that you're gonna have in your business. And so then, because to get the full 56,000, you need to make business income. They don't just let you take it if you don't make any money in your business. Does that make sense? Yeah, you need to show that you have business income before they'll let you deduct that. If you're showing a loss, they won't let you deduct that. They can let you deduct up to the remaining amount of, I'll say, the taxable income, right? Because like you said, if you're grossing 6 figures and you're gonna profit 50, 75K, that 50K, if you don't need it right now, right? You don't need it for cash flow reasons. That can all be taxable, tax deduction, and you can put that all towards your retirement.
Awesome.
Yeah.
Okay, that's definitely something to look into. Yeah.
Yeah, because seeing how you set up, where you're just taking a salary, it doesn't seem like your personal taxable income's gonna be that great, like that much, right?
Yeah.
Because different from an LLC where you have to take out all the income. So let's say you make $1 million for this business and you have to take out, I don't know, after expenses, 600K left, right? And then 300K each. That may be something we can dig more into, be like, okay, this is a whole bunch of deductions or credits that you should be looking into to take. But seeing that you're just taking a salary out of the C Corp, which is the 100, I think you mentioned 115,000.
Mhm.
Down there.
Yeah, that I think the best thing for you is just to plan for retirement, get that tax deduction even more.
And then
Mhm.
pay no taxes going forward.
Yeah.
Yeah.
Yeah. That's
Yeah,
a good
really.
idea.
And you're of age where like you don't have to worry about being penalized.
For
Yeah,
taking money out your.
if if we needed to put a roof on the house or do something, we could go grab that money, and we would really have no
Yeah.
penalty.
Yeah.
I have to look it up, but possibly you can also qualify for like a Roth program, right? A Roth program is when you put in after tax money into it and let it grow in an investment account, do mutual funds, ETFs, stocks, whatever you want to put that money in.
Right.
And Roth money is much easier to take out, right? Because it's already been taxed. So that money is very easy to be like, okay, at 5 years later, I need to replace my roof, or I need to, pay for someone's college, right? And then
Yeah.
you can easily take that out without any penalties.
Okay,
But,
cool.
yeah. So that part I have to look into. I don't know if there's any age restriction on it. I would think not, but I have to look into that.
Okay.